All right, guys, I welcome you to UFI week 29 pre-market analysis. Okay, welcome you to UFI pre-market analysis week 29. Right, my name is Kingsley. I'm a day trader. For those joining us for the first time, okay, if you're joining for the first time, you're welcome, right? And do well to join our Telegram channel. Okay, that's the UFI Trade Hub Telegram channel. Okay, that place we have series of free classes that will help change your trading narrative. Okay, ranging from the what's it called, the IUF simplified class we held earlier this year, and also the chart mastery class that we concluded a few weeks ago, right? So I welcome you once again. My name is Kingsley. Okay, so here we'll be analyzing the DXY. The XY is kind of the XY is dollar index, okay, and is kind of the should I say, let me put it this way, the Oga Patapata that controls the major currencies. Okay, the major currencies are the currencies with the USD, right? Hope you know. So the major currency are the currency with USD, whether either before or after it. Okay, so once you analyze the XY, what do you expect? You're expecting once, if the XY is bullish, just like as it is here. Okay, if the XY is bearish, just like it is here, okay, then you'll be expecting EUUSD to be bullish. Okay, so if you analyze and the directional bias you anticipate on the XY is for a sell, that means you should be expecting EUUSD to buy. You should also be expecting GBP to buy. Do you understand? You also be expecting AUD to buy. Okay, but it works based on correlation. Okay, so and the most correlated asset with the XY is EUUSD. They correlate, it has the highest correlation with the XY. They move almost similar in opposite direction. You understand? So if the XY, you can see as the XY displays the downside every candle from last week, upper week, Thursday till Thursday last week. All right, you can see it sold. The same thing applied here. It's bought. You understand? So they are almost 90%, let's say 90% correlated. Okay, so when the XY is bullish, you expect the XXX USD pairs to be bearish. XS USD pairs is pairs that have its currency before USD, and if the XY is bullish, you expect the USD XS pairs to move in the same direction. The XY example of USD XS pairs is the USD card. Okay, USD card, right? So that's it. But as I said, USD has the highest correlation with the XY. Okay, so that's why we analyze with the XY. Then you can use, I don't know the why I use GXY is so that you can actually use it to, maybe if you trade GBP USD, if you trade this thing, and if you understand correlation, I think it has correlation with gold and the rest of assets. Okay, if you understand it, once you understand what GXY is going to do, then you can actually implement its correlation to any assets you trade. You understand? If it actually DXY actually have impact on it. Okay, so now let's head into this. Okay, and as we said, whenever we get to our chart for pre-market analysis, we'll be viewing price from the higher time frame perspective. Okay, we're seeing price from the higher time frame perspective. What are we looking at in the higher time frame? We'll be looking at to know, okay, where is the next draw liquidity? Okay, we first determine where price is coming from. Then the next thing is, where is price currently? And the next question is, where is the next draw on liquidity? Okay, as you all know, price is not random. Okay, it books majorly based on liquidity, from internal liquidity to external liquidity and vice versa. Okay, but if you're not familiar with these terms, just make sure you join the UFI Trade Hub Telegram channel. Everything is listed there, both the short, every name I mentioned here, every terms I used here is already there. Okay, you can check the pinned message and you have access to all the classes. Okay, all right. So price books majorly based on liquidity, from internal liquidity to external liquidity. If you look at the XY last week, you can see how it have been tanking to the downside. Okay, tanking to the downside, whereby Euro USD have been expanding to the upside. Okay, and we caught a beautiful trade right there from those distance. Okay, please don't mind the setup. I think it's actually a reversal this time, anticipating, though, but I'm not trading it. It's just like just back testing something. Okay, you can see beautiful trades that's being displayed. Okay, so despite this, now you can see, if I look here, you can see loss. Okay, so that's why, because at times I used to tell my students that you can actually know the direction of the market and see get a loss, okay, you can actually be right in the analysis, and the analysis will fail. So that is the psychology, the place of psychology right now. Okay, but the main thing is for you to stick with the stick with your model, okay, provided you have an edge. Okay, but with this now, you can see how many trades we took, and you can see beautiful. This is a win, a loss, a win, right? A lose, a win. Okay, that is about 5 wins, 3 loss of, yeah, about 3 loss and 5 wins. And it's a beautiful one, right? You can see this a win too using our model. Just I trade only one single setup, okay, and also one pair. I trade one setup and I trade one pair, okay. So because I know that I don't need a lot of pair to be profitable, okay. So if you are here and you're still struggling to be profitable, why not try sticking to one pair? Okay, stick to one pair, stick to one model, okay. Trade it consistently for at least 6 months. Don't trade any other thing apart from that one model. Back to back, journal it, okay, review it, adjust, refine it until it's perfect. Trade it only that single setup. You can see how consistently profitable and how fast you can become, right? So just try it, and you just maybe come and give your testimony in my DM, right? Because I know it works magic. This is what I did, and I become profitable. Okay, but it depends on your personality. If you're the kind of person that maybe you are multitasking, you can still do it. But I tell you, this will teach you patience. Okay, because okay, you can see this week we have a lot of entries this week, but some week we used to still we only see one entry, two entry. So it's normal. It will teach you patience, right? Because it will help your psychology, build your psychology. Then maybe once you're consistently profitable with one pair, you can then gradually add one or two, okay, and make it two, sorry, max. I think three. I don't know what you're trading that you want to trade many this thing. Just few things. Instead, leverage on the ones you're familiar with and make the most out of it, right? So you can see beautiful trades, about 5 wins and 3 losses, and we still it's good because each of these what I target is 1:3 RR, okay, and it is enough. It is enough to kill the market, right? 1:3 RR, okay. That means if I'm losing 1%, if I have one win, I'm making 3%, okay. So only the 3 losses now is covered by one win. You see the beautiful thing. I have the rest. How many percent? I have the rest. 4 wins as my profit, which each of it give me 3%. Though I don't reach 3% in my main account, I reach 0.5. That means it should be giving me around three times 4 should be 12 divided by 2. That's 6% of your account size, and that is beautiful. Okay. So now getting back to the XY, what will you be looking at this week? What do you think will happen this week? What is the anticipation? Where's the next liquidity? Where's price coming from? Okay, we start from the weekly perspective. Okay, let's expand this. So looking at weekly, you can see price. We're anticipating price to go to the upside. You can see this gap right here in the monthly time frame. In the monthly time frame, sorry. So this is the monthly time frame. Okay, I was expecting price to go there. Okay, I wasn't actually expecting this low to be taken, and as you can see, it did, right? And when I was mentioning that price will definitely get here, I told you that price is always probabilistic. Okay, and I tell you guys that you don't need to be right or wrong to make money, right? And you can see how I won like series of trade last week, right? Despite my initial anticipation is for price to go up here, but it went down, right? Does it make market can always do it? I want you to understand that because some person they will be trying to like say their strategy is that no. You need to be flexible. Understand that you need to be flexible. React with the market. You don't that now just because I told you that I'm expecting price to get here, I must maintain my buy bias. No, I'm not stupid now. Right? I need to be flexible. I need to, okay, what are the conditions I look out for? Invalidation point. Once this happen, I will change my direction. Flexibility, right? Maybe your papa get market where you say this thing go must happen. No, all right. So no matter how high probability your this thing is, there is still chances that it may not execute your this thing what you think, right? So but the thing is, are you making money? That's the question, okay? That's the question, okay? And you don't need to be right or wrong before you make money. That's the one funny thing, right? So I was anticipating price to get to the upside and it went down and I still made what good money last week. You can see this one is okay. So that's it. I want you to understand that it helps your psychology now. I'm just trying to emphasize on this so that at least you understand this and stop putting your bias. Say this thing must happen. This thing must happen. No, you don't need to be right or wrong, but we anticipate and most of the time it still executes in our direction. Okay, and if anything happen, automatically change our bias. Flexibility. The main thing is to make money. You react with the market. Anything market want to do, let it do. Market is always right. Your own is to react and make money out of it. You understand? In either direction. So now, if you look at this page, you can see price expanded to the downside, taking out this low. You can see this trend line phantom here. So it took out the low right here. Okay, you can see these are relative equal lows. So it took it out this low and this low, took it out to fill this completely. Okay, to fill this completely. Okay, so in my own this thing, I think we may be seeing a bounce from here. Okay, you can see in 3 months it is also a gap in 3 months. So you can see also this is what is it called? Oh my god, I've forgotten. Mitigation block, right here. Okay, so or you can say it is a support, right? Anything you call it, no matter any strategy you teach, you use, sorry. So you can see the support. So price may definitely hold and bounce up from here because this is a strong zone, number one. And FVG here, in terms of institutional perspective, and you can see the support here too. Okay, it's a strong, this is a very strong area, and this is 3 month time frame. Okay, so price may bounce up from here. You understand that? Then gets to this high right there. Okay, but now that's not what we want to do now. We want to see what will happen next week. That's what we are trying to anticipate. Okay, so looking at last week, what happened? You can see price took out these lows, these two lows, relative equal lows right here. Okay, relative equal lows taken. Relative equal lows taken, right? Uh, Nice. So you have taken it into what? Into this average. You can see this is monthly average. So what do you expect? I will be expecting, as I said, if you check the higher time frame perspective, you see that this is a very strong zone. This is an FVG and this is also a support level. Okay. So price may be bouncing off from this level to the upside. But before then, we take it bit by bit. Okay. You take it bit by bit. For now, IUF is still bearish. You understand? IUF is still bearish in this. Where is price coming from? Price is coming from this gap. You can see price retreat into this gap. You can see contraction candle expansion to the downside. Why? Because IUF is bearish. You can see it took out this low, returning to this other block, bounce up from this other block, returning to into this FVG and expanded to the downside. Contraction, expansion to the downside. Right? If you took part in the chart mastery class we had the last time, you can understand what I'm saying. Okay, that's how price looks. And it had taken this low, which is the previous month's low, and taking this relative equal low. Okay, this is the external liquidity. So what do you expect now? So you should be expecting maybe price to return into the internal liquidity or continue to the downside or what reverse to the upside. Okay, but there's high chances that price may reverse to the upside. Okay, but it will not happen once. You understand? So this week, IUF in weekly time frame is still bearish. Okay, it's still bearish. There's price to continue to the downside. You understand? So now, what is the anticipation? Number one thing you should look out for is that if this previous week low is taken, you can just take this to your notes or anything anywhere. Okay. So this is the previous week low, right? Previous week low. If this previous week low is taken, then we'll be seeing a further expansion to the downside. Okay, take note of this. If this low is taken, okay, if this low is taken, we'll be seeing a further expansion to the downside. Okay, maybe after the expansion, then we'll be seeing a reversal to the upside. Okay, so if this low down is taken, you expect a further expansion to the downside, maybe before a retracement. But anyone that if this low is taken, you should be expecting a further expansion to the downside. Then anything that wants to happen, then will happen. Understand? Okay, so for me, if this low is taken, then I should be selling. Understand? So that's the anticipation number one here. That's the anticipation number one in the weekly perspective. Okay, I want you to know that IUF is still bearish. But remember, external liquidity is taken. Price books majorly based on liquidity. Internal liquidity, external liquidity. So external liquidity is taken. So we should be careful because we may be seeing a reversal to the upside. Okay. Now, that is the anticipation. So here now, what may happen next week is indecisive. Okay. Why is it like in weekly perspective now? Okay, it's indecisive because external liquidity is taken. Okay, you should be expecting a reversal, but the condition is if this previous week low is taken, then you should be seeing a further expansion to the downside. then before you may be seeing a reversal, because there is need for a reversal here, because we had so much expansion already. Okay, there is need for a reversal. And two, price is at a very strong higher time frame zone, so we may be seeing a reversal. But before that, we need to follow price. Price is still bearish. If this low is taken, we should be seeing a little further expansion to the downside before reversal. Okay, take note. That's what I'm looking at for in the weekly perspective. But as you all know, we only use this to determine the order flow, right? And the order flow here is an external low is taken, you should be expecting a reversal. Okay, but before that, if this previous week low is taken, you should be expecting a reversal to the downside, a further expansion to the downside before a reversal to the upside. But if it is defended, then you should be expecting what? An expansion to the upside if this low is not taken. Okay, so that's it. Why do you expect an expansion to the upside? Because this external liquidity is taken. Okay, so you should be careful trading, still selling BX right now, or still buying Euro USD. So you should be careful. Buying Euro USD, you need to be careful, right? You need to, because we had so much expansion as we can see in daily time frame. How many consecutive candles? We still get to daily time frame, but I want you to take notes. We may be expecting a reversal. Okay, so if you are selling the XY or buying Euro, you should be careful, right? Because you may be experiencing expansion to the upside. But meanwhile, if the previous week low is taken, then we can still expect price to go to the upside to fill the internal liquidity, the gaps that was created right here, maybe into this other block right here. Okay, so that's the expectation in the weekly time frame. Weekly time frame is still bearish, but external liquidity is taken, so we are expecting a reversal. Okay, if our condition for reversal is met, you don't just start trying to catch the reversal when the gap is not met. Okay, so that's it. So now let's go to the daily time frame. Let's see what's happening. What are we anticipating the daily time frame? Okay, this is the lows. Let's transpose this low to daily time frame. So this is that low. This is that low. Oh, beautiful. You can see that last week, okay, I put drawn liquidity here, and you can see how price expanded to this place. Sorry, we didn't do pre-market analysis last week because this reversal, this sale started last week. Okay, started last week. Sorry, but I couldn't hold the pre-market analysis class because though we analyzed this in my private class, okay, with my mentorship students, you understand, we actually analyzed it on Monday. I posted, I think I used my phone to record my screen and send to them what you anticipate. We first anticipated this low and it was taken, and we anticipated this one and it was taken. Then into this one right here. You can see. So that's how we sold. We're able to sell the XI throughout. When I mean selling the XI, what I mean is that we are buying Euro USD. Okay. So if you check my entries, you can see most of it is buy. I only look out for buy. You can see buy. You understand? So that's it. Because the IF is bullish. And there is no reversal confirmation, because had it been there is reversal confirmation, we have changed our bias, but there is not. So every single day we come and listen. There's when I was doing my market review, I wrote something on my journal. I said market can be oversold and still price will keep going up. Take note of that, because some of us have tried as much as we could to catch reversals when there's no confirmation yet. Market can be oversold, oversold or overbought. Yes, market can be overbought and still keep going to the upside. Take note. If you look at what happened in the way, you can see even at this point, market have expanded very well. 4 consecutive days, there is bullish listing, contraction can. I was even expecting a reversal to the downside. But before London keys on this high is taken, we start buying, all right? We don't force our this thing. That's why I like my strategy. Very simple. I don't like once this is happened, what I'm looking for is buy. So maybe at the end of the day, even if my listing didn't execute, then the next day I will look at the market. I know what happened before I will know when I will change my bias if reversal confirmation is there. But there are no reversal confirmation. We keep buying to this point. Then on Friday, there was no actually valid entry on Friday. So no trade. So you can see, guys, so it's very, very simple. Market can also be oversold and still selling. Okay, it can be oversold and still selling. Okay, so make some person will try to catch reversal at this point, it keep selling, right? So it happens. Okay, I just want you to take note of that. So now you can see price have expanded very well on the DXY, taking this equal lows right here. Okay, this is clusters of liquidity resting below here. So market need to clear it. Clear them. Everybody was out, and what do you expect? This was Friday right here, closing bullish. Okay, so what do you expect, guys? remember, we use the daily time frame to determine our directional bias. Okay, we just use the weekly to determine what is the likely expansion. Okay, but what do we do in the daily time frame? We do more of what we use it to determine directional bias. Okay, number one, external liquidity is taken. Take note of that. External liquidity is taken. We said we are expecting a reversal. Okay, and Friday close bullish, telling you that buyers are there, right? Telling you that buyers are present in the market. As simple as that. Now look at here. This is previous day high. This is very simple. Previous day high. What is an example of a reversal pattern that I taught us in the previous day, that I taught us in the chart mastery class is what swing point, right? So if this high is taken, guys, if this high is taken now, if this high is taken before morning, before no occasion, right? I'm buying tomorrow. I'm buying the XY tomorrow. That means I am selling this one, this young man. That is the Euro USD. I'm selling it tomorrow. That's what it means. Okay. If this high is taken before tomorrow morning, take notes. Okay. So that's it. That's how you can see how I streamline from the weekly into the daily. Now using the daily to determine my directional bias is very, very simple. If this high is taken, it means there's high chances that a swing low is about to form. You understand? Then I'll be selling. Then where do you think I will stop selling? No, it's very, very simple. I will determine once this high is taken, it means closed and Monday closing as a swing point, it means this range is defined already. So I will draw my what's it called, fib level from the recent high to the low. But this low is not yet valid until a swing low is formed. Okay, it's a swing low is formed. Okay, but if tomorrow closed forming a swing low, right? That's what we expect. Right, so now I'll be expecting price to reach at least the equilibrium. Okay, so at the equilibrium, what do you see there? There's a gap right there. Okay, at least equilibrium. So this is the first target right there. Okay, CB. CB 1 day. So that is the first target, guys. Now, before the first target, you can see it is above the equilibrium of this range, the range of this thing or this chart. Okay, it is at the equilibrium. You understand? That is at the top of the equilibrium, right? That is price is at premium when you draw your flip level from in a sell direction. Okay, price above the equilibrium level. Price above the equilibrium level is called what? A premium level. Okay, a premium level. Take note of that. So now the first drawn liquidity above the 50% equilibrium is this gap right here. Okay, so this is the first draw on liquidity here. But there is gap here. What that if there is reversal? What if price reach this gap and there is a reversal? What do you need to do? You start selling. You're not price, guys. Pay attention. Do you hear me? You start selling. If price gets feel this one and didn't reach for this one, and then reversal pattern, what do I need to do? I'll start selling. Simple. I am not price because I told you that price may get to 50. Most of the times it gets to 50%. But I'm trying to be realistic and follow price, and that's how you should be doing. Okay. If price didn't get here, but if you because this is a gap, if you just this one and the reversal pattern is formed, which is what either a swing high, sorry, is that a swing high formed, then I'll start selling. Okay, flexibility, guys. Okay, but my first target is here. So, but before I start buying, what is the condition for this previous side to be taken? Then I'll start buying. Then I'll buy until price reach for at least equilibrium level. But before price reach there, this is also an internal liquidity, this gap right here. So if a swing point formed at this gap, which is FVG, then I'll also start selling. But if not, I'll keep buying until a reversal is formed at any equilibrium level. You can see we have 3 FVGs, 4 FVGs. You can see this is the first FVG, second FVG, third FVG, fourth FVG, fifth FVG. So each day created a gap. You understand? But most likely price may be reaching for this 50%. So that's what I'm anticipating, guys, for the XY. So now reverse is the case in Euro USD, right? Almost similar thing. If this high is taken, then you should be expecting a further expansion to the upside in the weekly perspective. Okay, you already know what will happen using the XY. Okay, the same narrative here. Contraction candle. Now, what is the condition? If this low is taken, then if this low is taken, I'll be selling, right? And if this high is taken, take notes, guys. I'll be buying. Okay, the same thing apply. You can still apply this thing in the XY. Okay, so if this high is taken, I'll be buying for that a little buy. Okay, for tomorrow, maybe I'll buy in the London section. Then maybe because they definitely price will reverse. Price have expanded very well. Definitely, price have expanded very well. So definitely price will reverse. Definitely, okay. So, but in case if high this high is taken, I'll buy in the morning and but if it happened before morning, like before London queues on, then I'll buy in the morning. Then maybe New York queues on price may reverse from experience, okay. But if this low is taken, which most likely it will happen, then I will be selling, guys. I'll be selling Euro USD. Where's the target? Where's the target? Just draw your this thing. If a swing high, I tell you that this before you draw this thing, a swing high should be confirmed. Okay, which will be confirmed by tomorrow's close candle. And when tomorrow closes, that's when you confirm it. Okay. So, but if let's say swing high is formed here, so you draw your fib level. So where's the drawn liquidity in the fib level? Where's the first drawn liquidity? You can see this gap here. You can see this gap right here. Yes, this small gap. Then you can see this one right here. Okay. Okay. Close. So my battery want to learn that, guys. Or this. Okay. So, but at least I want price to reach into equilibrium level, at least 50% of this range. Okay, for a retracement before a continuation to the upside. If price wants to continue to the upside, okay. And the confirmation is what? A reversal candle. All right, guys. So because of my battery backup and there's no lights, I think we are come